Hi, I'm Jason Brooks with Invico Capital Corporation. I want to touch on a topic today that's important to a number of investors, and that's diversification. In the alternative space, diversification is important. However, it can be harder to achieve because in the Canadian marketplace, a number of alternative providers' underlying assets are based on real estate. Obviously, there's a number of segments of real estate. However, when you look at true diversification with alternatives, it can be difficult to access exposure outside of real estate in the Canadian marketplace in particular. The Invico Diversified Income Fund is made up of a number of asset categories. One of them is real estate on the private credit side. However, in the Invico Diversified Income Fund, less than 10% of our exposure is actually in real estate, and currently that exposure sits below 5%. And when we're looking at real estate, it's important to discuss the differences between the segments. There's development, there's residential rental, there's commercial, there's industrial, and there's office. In our fund, we are particularly focused on lending to residential rental properties. That has been an area that has continued to perform, and we expect this performance will be maintained. The key thing to remember here is that in the rental space, there is real tightness. Supply-demand continues to remain out of balance. Rental rates are increasing, and in fact, those increases are outpacing any increase in the cost structure related to inflation or interest rate increases. So we're actually seeing our borrowers strengthen their financial results over this period of time. This is not necessarily the case in commercial and office, where we are seeing both the effects of continued work from home trends coming out of the pandemic, along with sharply rising real estate costs, particularly for those companies that have a component of their debt that is variable rate. When you are constructing an alternative portfolio, it's important to keep in mind that this diversification. Obviously, real estate is a key component in this space and has performed well over time. But as we all know, past performance is not indicative of future results, and there will be changes in this complex. The Invico Diversified Income Fund does provide exposure outside of real estate in the alternative space, particularly with energy and a diversified portfolio of private credit. That allows you to construct a portfolio that has exposures outside of what is often a core allocation to real estate. We can be very complementary. In fact, in 2022, when a lot of the markets were challenged, particularly public markets and real estate markets were challenged, the Invico Diversified Income Fund delivered over 17% return over that calendar year. The Invico Fund provides substantial diversification opportunities outside of many people's core real estate holdings. To get more information on this, please contact your Invico wholesaler.